Hello and welcome to this session on Bank of India Credit Officer exam, which was held for Scale 2, 3 and 4 and it was held on 16th of August. So I personally applied for a Scale 4 post as presently I am a Scale 3 officer in a PSB and I have recollected almost 70 plus questions which will be helpful for the candidates who are going to appear for any lateral entry exams or any other bank exams. They can have a idea that which type of questions are being asked in the banking exams. So let's start. So the first question was, what is the provisioning for standard assets for agriculture and MSME advances? So there are for standard assets there are three provisioning. One is 0.25, which is applicable for agriculture and MSME advances, and second is 1.00, which is applicable for CRE, that is also known as commercial real estate, and 0.40 happens to be applicable for all others. So here the correct answer will be 0.25. Next question was, hypothecation charge comes under which law? So this was a bit different type of question, like which is the underlying law for this type of charge. So as we all know, there are various charges for different type of securities, like mortgage charge, pledge, hypothecation, lien and assignment. So mortgage and assignment is mentioned in Transfer of Property Act 1882. Pledge and lien are mentioned in Indian Contract Act, and hypothecation is mentioned in Surface Act. So the Surface will be the answer here. So the next question is, a customer came for cash credit limit against book debts, which will be applicable charge to be created. So as we all know, there are different type of charges which are taken on the securities obtained in the loan. So based on the different type of securities, different type of charges being created. So for WHR, warehouse receipts and gold ornaments, pledge is used. For immovable security residential housing or any housing project or any immovable property, mortgage charges created. And for hypothecation of for stock, for movable stocks and very vehicles, hypothecation charge is created. And for fixed deposits, whenever we give loan against fixed deposits, then we are creating lien on the fixed deposits. And assignment is applicable in the case of book debts and LIC policies. So assignment will be answer here. Many a times we discuss that hypothecation is also applicable in case of book debts, but here in the options hypothecation was not available in the available there. Next question is, marking of a reclassification of a asset based on the erosion of security. So this is mentioned in the IRP norms, that is income recognition and asset classification provisioning norms. So here initial loan amount was 50 lakh rupees, and the present initially when the valuation was done, then the valuation was 25 lakhs, and when the fresh valuation has been obtained, then the valuation came at 4 lakh rupees. So what we will do, we will compare the value of security with the outstanding of the loan. So it will come around 8%, and it is, as we can see that it is less than 10%. So whenever a security whenever a value of security becomes less than 10% of the outstanding value, then it is straight away classified as a loss asset. and when the value of the security becomes less than 50%, then that is classified as doubtful asset. So let's go to the next question. What will be provisioning for secured portion of a loan which is classified as doubtful for more than 3 years? So in the question it was mentioned that it is classified in the doubtful category for more than 3 years. So as we all know, whenever a loan become NPA, so then it will come to in the substandard category, and in the substandard it happens to be for 12 months. Next it goes to DA1. In DA1 it remains in 12 to 24 months. Next it goes to DA2. DA2 is classified for 24 to 48 months, and next it goes to DA3 when the loan is NPA for more than 48 months, and next happens to be loss. When the bank write off that particular loan from its book, then it is classified as loss. So for getting the provisions, there are two segments. One is the secured portion and another is the unsecured portion. So whenever a loan happens to be in substandards, then the 15% provisioning is required for secured portion and 25% for unsecured portion. When it comes to DA1, then 25% provisioning is required for secured portion and 100% is required for unsecured portion. And for DA2, for secured portion it's 40% and unsecured portion it's 100%. And in DA3, 100% is applicable for both the cases. So here the answer will be 100%. Let's go to next question. So the next question is we have to derive a unit to be sold for a booking of profit of 30,000, and the sales figure, variable cost, fixed cost, and the unit sold was given. So this is known as cost volume profit ratio, and the formula is fixed cost plus target profit divided by contribution margin per unit. And as we all know, contribution is sales minus variable cost, so it will come to 24 plus 30 divided by, and the sales here is 80,000 and the unit sold is 20,000, so it will come to 4, and the variable cost is 40,000 and the unit sold is 20,000, so it will come to 2, so it will come to 27,000 will be the answer for this question. Next question is reclassification of a loan to NPA when it is not reviewed and renewed. So if any account, CCOD account, is not reviewed and renewed for 180 days, then it is classified as NPA. And there are many other reasons for which NPA classification is done. One reason is this review renewal of facility. Other is updation of stock statement in the loan. So whenever the stock is not updated in a loan for more than 3 months, then it is classified as NPA. And for the term loans, we all know, if the principal and interest is unpaid for 90 days, then it is classified as NPA. And for the CCOD accounts, it is also termed as out of order. So when an account is out of order for 90 days, then it will be termed as a NPA. And there are three such instances when an CCOD account becomes out of order. First instance is when the interest is not paid. So if the interest on the CCOD account is not paid for 90 days, then it will be classified as NPA. And if it is overdrawn for more than 90 days, then also it will be classified as NPA. So, and the next reason is there is a we see the debit credit summation in that account, and if for the past 90 days whatever debit entry is there and there is no sufficient credit against the debit entries, then it will be classified as NPA. So I will give one example. So let's say suppose income CCOD account we are seeing today, and in the last 90 days there is a debit entry in the account is of 50,000 rupees, and if we are adding all the credit entries of that account, then it is coming as 40,000 rupees. So this account will be classified as NPA for shortfall of 10,000 rupees. So for this question, the 188 days is the correct answer. Let's go to the next question. Next question was to calculate working capital turnover ratio where the current assets, current liability and net sales was provided. So the working capital turnover ratio formula is net sales by net working capital. So as far as I remember the figures, the net sales was like 6 lakhs was given, and the current assets was 5 lakh and current liability was 2 lakh. So it will come to 2 only. So 2 will be the answer here. Next question was based on cash flow. So as we all know, there are three particular segments. Whenever we will prepare a cash flow statement, then we are considering income basically majorly from three categories, that is income from investing activity, income from operating activity and income from financing activity. So here in the question, income from investing activity was 150, income from operating activity was 80, and income from financing activity was minus 250. So net it will come to minus 20. So the answer will be decrease of 20,000 or 20 lakhs. Next question was whenever a loan is provided to SSG or JLG by a bank, then what percent of loan is refinanced to bank by NABARD? So the correct answer is 100%. Next question is credit report to be generated for loan amount of 5 crores. Next question was which of the following is not a type of capital busting method? So there are 4 or 5 methods with which we calculate the capital busting, but in the question one option was net asset value. So there is no such method in the capital busting. So I will tell you what are the types for which the capital busting is calculated. One is NPV method, that is net present value. Second is IRR method, that is internal rate of return. Third is ARR, that is average rate of return. Fourth is payback period, and the fifth is profitability index. So payback period, when we apply the rupee discounting, when we apply the time value of the money and the discounting of that rupee with the time value, then it is known as discounted payback period. Next question was also based on capital vesting method, and we have to calculate the payback period. If initial investment is 12,000 and the annual inflow is 2,000 rupees. So for calculating the payback period, it's a simple calculation. Whenever the initial investment becomes zero, with the annual inflows of the in that investment, then that particular year will become the payback period. So initial investment is 12,000. Initial investment was 12,000 and the annual cash flow was 2,000 rupees. So within 6 years, the whole whatever the investment was done, it will be come back as a return. So the answer will be 6 years. When does a residential housing project is classified as CRE? So CRE, as we all know, it's a commercial real estate. So it was particularly mentioned that whenever a residential housing project is meant for renting out, and that will be when it will be classified in the CRE. So whenever a residential housing unit is being made for renting out, then third unit onwards, it will be classified as so this question was from MSME Act, that what is the penalty for delayed payment in case of MSME when the money is not returned within a stipulated time. This timeline was not mentioned, but this also comes sometimes in the exam. That's why I have mentioned here. So basically, any buyer who is purchasing goods on credit needs to return the money within 45 days. If he is not returning that money within 45 days, then penalty will be charged at the rate of 3x of bank rate, and it will be compounding monthly. For making a confusion, there was so many options like 3x of bank rate compounding monthly, 3x of bank rate compounding quarterly, 2x of bank rate compounding quarterly, 2x of bank rate compounding monthly, likewise. But the compounding happens to be monthly and the rate happens to be 3x of bank rate, yani 3 times of bank rate. Next question is, if a director of a company takes an action beyond capacity of a director, then it is termed as ultra vires. Next question was from the KYC guidelines, like customer is running casino will be classified in which risk categorization. So we all know there are three types of risk categorization, that is low, medium and high. So we need to do the re-KYC in these accounts based on the risk categorization of the accounts. So for the low risk categorization, 10 years is the mandate, and for the low risk categorization, 10 years is the time, and for the medium risk it is 8 years, and for the high risk it is 2 years. So likewise you can remember 2 plus 8 is equal to 10. This is for high, this is for medium, this is for low. Next question was cash and cash equivalent consists of which component? This is needed to calculate whenever we are calculating cash ratio, then we need this value. So basically physical cash along with cash at bank and bank deposits, which can be liquidated in 3 months of within 3 months, then it will be counted as cash and cash equivalent. So basically the major things whatever it comes is physical cash, cash at bank, commercial paper, certificate of deposits, bank deposits, and it can be liquidated within 3 months. Next was related to the calculations of quick ratio. So what is deducted from current assets while calculating quick ratio? So as we all know, current ratio is current assets by current liabilities. So quick ratio is current assets minus inventory minus prepaid expenses divided by current liabilities. So inventory and prepaid expenses is being deducted from current assets. So in the options, inventory was not mentioned. So the correct option will be prepaid expenses. Next question was from the RBI exposure norms, which says that while calculating total exposure from a bank, which exposure is not counted. So I will elaborate this question. It was something like that. Whenever we see a borrower total borrowing from the banking sector, then which type of exposure is not counted. Like it was mentioned that let's suppose a customer is having a CC with us, a term loan with us, or different type of loans are there. So while calculating the total exposure, which particular exposure will not be counted? So the answer will be CP and CD, commercial paper and certificate of deposits. So the next question was, for maintaining a current account in more than one bank, what is the maximum exposure? So any borrowing firm who is having total exposure from the banking industry up to 5 crores, he can have any number of accounts, current accounts. So the next question was from Basel norms. So the question was, what is the counter cyclical capital buffer to be maintained as per Basel norms? So this happens to be 2.5% of the RWA, and as we see there happens to be many questions in the exam from the Basel norms. So I will discuss the table in a brief. Like CET is common equity, that needs to be maintained as 5.5%, and additional tier 1 1.5%, tier 2 2%. Counter cyclical capital buffer is 2.5%, so 2.2 11.5%. So this is the capital adequacy ratio which needs to be maintained by all PSBs. There is one more question which is related to Basel norms, that is NSFR, net stable funding ratio, and liquidity coverage ratio. So many a times I have seen questions like this is the basic question, that what is the minimum maintenance that will maintain for NSFR and LCR, that happens to be 100%. And whenever when it is asked that what is the difference between NSFR and this LCR, then you can say that LCR is for maintaining the liquidity for the short term, and NSFR is for long term. Next question was, which of the following loan is not to be classified as priority sector? So as we all know, there are eight major sectors where in which priority sector PSL guidelines has been made, and in the question the one option was there which was corporate infrastructure or something was there, so that was not related to the PSL norms, so that will be the correct answer. Next question is, what is the maximum income criteria for a microfinance loan? So this income criteria is 3 lakh rupees. So anyone who is having household income of less than 3 lakh, then it will be classified as, and he is getting a loan, then it will be classified as microfinance loan and it will be counted under the PSL. Next question is, what is the maximum tenure for which DCCU can be extended for a infrastructure project loan? So in this Bank of India examination, I saw that there were many questions related to the project finance, and though it was more or less direct questions, but they were conceptual also. So for an infrastructure project, it is 3 years and 2 years for non-infra. So that's all for now. Here is the list of topics on which the questions were asked, and if anything is there that if any error is there during the slides or discussion of the questions, you can mention in the comment section. And if you wish to if you want me to make any videos on any particular topic, then and that thing also you can mention in the comment section. And if you like the video and like the efforts made by me, then press the like button. Thank you so much.